Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Hester Biosciences. It is an interesting stock. Let's understand the valuations and the prospects for the company. So, let's get started. First, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do it with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Hester Biosciences, a small request to kindly support me on Patreon. Once you do that, help me grow a channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, once you get $100 upfront, you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, kindly contact me on email. And also, you cannot pay on Patreon, kindly take the membership on YouTube or WhatsApp. Now about Hester Biosciences, the company was established in 1987. It is one of India's leading animal healthcare companies, second largest poultry vaccine manufacturer here, and it exports around the globe, including Africa, Europe, and Asia. Don't have much presence in the Americas, but get lucrative orders from other parts of the world. Plus, it is only the second listed firm, only two listed firms, so prominent listed firms are there in the animal care business. There's Sequent and there is Hester Biosciences. Their product range from vaccines, health products to diagnostics, and the market cap of the company is around 2100 crores. So, it is a small cap company that could become big going forward. If you look at the financials, these are Q3 numbers. Q4 numbers are still not out. Sales were flat at around 55 crores. Profit dipped by around 30% in this quarter versus the last one. There has been decent promoter holding. Debt is low. ROE of 26% is pretty strong, and margins at 35% is also extremely strong, although margins were even better than this a year back, so it has reduced, but the numbers are on the flattish side, and that is why the stock is down from the highs. The stock is at least down 30% from the all-time highs, around 25-30%. So attractive levels at the moment. If you look at the performance of the stock has done virtually nothing in the past 1 year. If you see, have more than doubled since 2020, but that is not means absolutely out of this world, because many companies have gone up 10x 20x, but this company has doubled over the last couple of years, has been consolidating over the last 1 year. Last 2 quarters hasn't been that great, so subdued numbers are coming out, but currently it is trading at a reasonable valuations compared to what it used to trade, say 2 3 years back. In fact, before the pandemic, it used to trade at 70 80 times. Currently it is trading at 50 times earnings, current earnings. And sector is coming back into focus after a lull of about 6 8 months. 1 year sector is coming back. The pharmaceutical sector should come back, although US FDA has become active with respect to inspections. But in the meanwhile, if you look at the animal healthcare business, it hasn't done that well during the pandemic because of the kind of conditions we were in globally. But now things are picking up with people taking more pets to the you can say veterinary, and many other things opening up. Things are looking better for the industry altogether. Low liquidity can be a positive or a negative. Be very extremely careful buying into the stock, because it is a slightly illiquid counter in that respect. So why I believe it is a buy on declines, it is a unique business with top clients in its domain, and defensives are coming back into focus, especially with the kind of inflationary pressure we are going to see going forward. I think pharma and IT is going to do well, and this you can say falls into one of those categories. Top and bottom line has been strong, although the last 2 quarters hasn't been that great. But I expect things to pick up going forward and have corrected to attractive levels around you can say around 2000 are very good levels to get into something like Hester. So 5 to 8% lower could be interesting levels to accumulate the stock. Return ratios are strong, and sector is becoming attractive among PE investors, and we are seeing large PE investors taking deals into this sector in unlisted players in the animal healthcare business. So we know about that, and so things are picking up in the whole sector altogether. Remember, it's a very niche space. This is not, you can say, human pharmaceutical business. This is into animal healthcare, and very few companies are there. Competition is strong, but margins are also large in this business if you get a few good orders. So I believe you can buy now, and on dips below 2000 may emerge as one of the winners when markets recover from the current lull. Have a 3 to 5 year period, you can say a time frame. I think this can very well go up 4x over the next 5 6 years. So 8,000 could be a possibility, but again, put only less than 10%, or if possible only 5% of your total holding, so that even if you lose, you don't lose a lot in terms of the total portfolio size. So that's the call. So this is my video on Hester Biosciences. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.